Today we're going to be looking at a technical indicator known as Fibonacci. Fibonacci retracements are very popular with a lot of stock traders and a lot of professionals in the market. I'll show you how they work and how you can apply them to your own trading, whether you're trading stocks, futures, precious metals, or foreign exchange. A lot of technical indicators we use today were really born out of the 1970s and some even at the turn of the century. But this indicator finds its roots in 12th century Italy. It was discovered by Leonardo Fibonacci, who is credited with bringing an amazing set of numbers into the Western world. The Fibonacci sequence is the series of numbers. The next number is found by adding up the two numbers before it. Fibonacci numbers, their ratio is very close to the golden ratio, which is approximately 1.618. We'll be talking about that ratio a little later on in some of the examples I'll be sharing with you. So let's get started right away. First things first, go up to the Fibonacci tool right here, click it once. It shows you a little yellow box right here. It tells you the tool is live. Then you go to the highest point on the chart, which is right here. You can see that right here. Click once, and you can see a tool becomes alive. Then drag it down, hold the mouse, and drag it down to the lows. That's just about perfect. Okay, so what you see now are two sets of numbers on these lines that go across, these horizontal lines that go across. One is percentage numbers, 23.6%, 38.2%, 50%, and 61.8%. And on the other side, the corresponding dollar value of the stock. So it's $566.01 and $689.73. So what you look for in a retracement is after a market's made a high, it technically usually retraces. So the first retracement came down to the 23.6%, then bounced back up. The next one came down to 38.2, bounced back up, and then down to 50, bounced back up, and finally down to 61.8%. Now that's considered like a full retracement. Now remember, the line was going up, so the trend was up. You're buying a pullback in a bull market. The other tool you can use in conjunction with the Fibonacci is the Williams percent R tool. And when it gets very oversold like here, you can see there's the low there, the 61.8% retracement, very oversold, and just shows a little bit of turn. That's a good time to be a buyer. It's a low risk buy. So that's how you use the Fibonacci tool in a bull market. And it also, you can scope this down and make it even so it's smaller than this. And let me show you how that works. So you get, this is a big retracement obviously over several months, but it could be a short retracement over just a matter of weeks. And I'll show you how that works. So I've showed you how this works on a big correction in a bull market. I want to show you how it works on a little mini correction. Percentages stay the same. That's the beautiful thing about the Fibonacci tool. So let's go to our Fibonacci tool right here, make it live. Little yellow box comes here. Go to the highest point on the chart right here. Drag it down to the lowest point. And here's those same percentages, 50%, 61.8%. Amazing. I think it's just an extraordinary thing. But let me show you what happened in the stock afterwards. Remember, we looked at this retracement first of all, and we just looked at this little mini retracement, and that's what will happen. It'll train your eye to become accustomed to seeing these pullbacks so you can spot them really quickly. I'm also going to show you some other examples in bear markets. In this particular example, we are looking at a bear market in a security, and it shows you how the Fibonacci retracement works in a scenario just like that. So what we would do, just the reverse, we go to our Fibonacci tool, click once, you can see the yellow box comes here, and we draw from the highest point down to the lowest point. And look at how this market gets right up to the 61.8% retracement area and falters and begins to fall down, continually going all the way down to $6.76. Well, the magic is really where you see these markets go to these points, these 50%, the 61.8%, and how you look at the other indicators such as the Williams percent R. Clearly the market was overvalued or overbought here and at resistance. So it was a natural place for this market to turn around. And certainly when it went below the 38.2% line, that was like all in. The market's heading lower. So that's how you use Fibonacci and how you can benefit in your own trading. You can use this on stocks, futures, precious metals, or foreign exchange. It works. It's Not all the time, but it works enough of the time to certainly warrant using this tool in your own trading. Every success in the future.